sometimes you wanna quit. Why do I try? Harder I try, harder it gets. You gotta have courage to do it like this. Gotta be perfect, I can never miss. Nah, I did it before, so I'll do it again. Are you getting the hint? They don't wanna stop me, they don't wanna knock me. I'm never gonna quit, so they calling me Rocky. I know I've been selfish, I know I've been cocky. Say what you want and don't care if you love me. Don't wanna stop me, they don't wanna knock me. I'm never gonna quit, so they calling me Rocky. I know I've been selfish, I know I've been cocky. Say what you want and don't care if you love me. I hear you talking. They say you doubt me. Sit back and watch me. Oh, sit back and watch me. I got them chasing, no more patience. Feet keep pacing, got amazing. I'm blessed. Most anticipated, most hated. Since I was liberated, I made it. Now I'm seeing amazing like lazy. Let's set the record straight, racist. I'm skipping all of these stages. I should be put in these cages. It's crowded now, slave ships. Good choices we gonna be making. Now I'm underground like these maces. Don't care if I'm famous, can care less, you take it. I hope the eraser this world needs some saving. I hear you talking. They say you doubt me. Sit back and watch me. Oh, sit back and watch me. Good choices we gonna be making. Now I'm underground like these maces. Don't care if I'm famous, can care less, you take it. I hope the embrace of this world needs some saving. And love is what all of us here should be craving. And how can we fake it? These women amazing appearance, so they can just take for the taking. Rebuke you saying, but I know it's me, so who am I playing? Cause anyone sees. Cause we're giving nice things, but then we go break it. Yeah, identity reborn. Jason. I hear you talking. They say you doubt me. Sit back and watch me. Sit back and watch.
Alright, if you guys can give me a little sound check, that'd be good. Alright, perfect. Sorry about that. So just want to get in a quick market update. Nothing's changed, right? So we're in the same range, so there's not too much exciting going on, except, well, I shouldn't say that. I mean, if you're working on the low time frames, actually it's very exciting the way things went down last night. I was personally sleeping through it, but we can talk about it just to kind of explore where we are, where we were, etc. Now, just kind of to pick up where we left off last time, pretty simple. We talked about, this is actually all from the last stream, this particular box that we have here. So what did we talk about? It was, if I go to a lower time frame, we can see it a little bit clearer actually. Alright, so we had this little box just sitting up there, right? In this box here. And what we talked about on that particular stream was, if we break this level, right, we're likely to wick into this level. And it just happened to work out that way. And all it is a range, right? We set a range high, we set a range low. We're playing in the lower half of the range. We try to make our way up. We got rejected. Spent some time in here. Went again. Again, we're just basically looking at some counterplay action within the bigger trend. The bigger trend at the moment is down. Does that mean we're in a bear market? No, it doesn't mean bear market. It just means that the trend itself is down at the moment. You know, bear market is to be determined. It doesn't necessarily have to be bull one instant, bear the next. I mean, may it end up playing out that way and we look back and say, yeah, absolutely, we're in a bear market? Sure, of course, but obviously there's things that are going on, like this 55-week holding, right? If we look at it on the daily, That's going to be a 377. That this is the 377 holding on the daily pretty strongly, right? So those are keys. I mean, this is a level that a lot of people would look at as sort of a bull bear type of flip, but at the same time, you don't just want to see price above or below. You would want to see some rejections below, right? So you'd want price down, come back up, reject, head back down, and say, okay, you know what? We're probably going to be hanging out down here for quite a while, if that's the case. But we don't have to make, again, sweeping observations. We don't have to know the future. We just need to know what's going to happen today, tomorrow, the next day, this type of thing, or in a few hours, instead of knowing the exact plan. I see these guys come out and they said, we're going to go like this, and then we're going to go like that, and it's going to happen this way and that way. And look, when it's somewhat correct, everyone thinks they have a crystal ball, right? Like, hey, that guy has a crystal ball because this time he nailed it. But, and again, for those that nailed it, God bless you. You did well. It's not an offense to those people at all, but I think they would say, anyone that's, I've never met a talented trader that said, oh, I know the future. You know what I mean? It just doesn't work that way. And then, of course, most of those guys that you look at their stream, you'll see that they have 47 scenarios over the past 20 something days. And, oh, look at this scenario. Out of the 47, this one worked out. All right, well, that's a little bit extreme then to think that you nailed it, right? So what we want to nail is the next move. That's the idea. And sometimes, look, I might have we try not to have a bias, but naturally you're going to have an opinion that forms in your mind, and that opinion can change very quickly. By the way, I probably have mapped this thing out as good as I can, right? And that sounds like I'm going to say, hey, look how great I did. But in reality, while mapping this thing out great, I've made significant errors, right? And some of it is part of the 24-hour market. Like last night, I did have my long going still, right? And so here I am with this box from last week, right? I'm in this situation. I felt, it was a little dicey in here. I was looking at the 2 hour because I think that's the most relevant time frame of what's been going on. And then basically before I went to bed, I'm thinking, you know what? I think this 2 hour is going to hold ultimately. I'm starting to see this little air line right here. So I'm thinking maybe this guy's going to do one of these situations where even if it does roll over, I think I'll have a chance to view it. For me, it was going to be about 6 hours later, right? Well, guess what? I was wrong. But here's the key. I like to, I don't want to say like, hey, look at the great things I did. I could bring up a sheet of trades and say, look at these wonderful trades. And I mean, I don't see what the point is of doing that. I mean, ultimately, if it's beneficial, then fine. Hey, look at this trade. This is how it worked out. This is what I saw, etc. Okay, that's beneficial to someone. But otherwise, it's not very beneficial to tell you that. I rather tell people the mistakes, right? And say, hey, look at the error that I made. And by the way, the error is normal. That's trading, right? If we're trying to gloat, let's compare bank accounts or something like that. I mean, but for other than that, it's kind of silly to go through this process. What I want to tell people is like, man, you can have a plan, right? And map it out wonderful. On Discord, we were talking about here towards the end of the week, coming to the weekend, that hey, you know what, the 12-hour was showing a good counter trend possibility, and I'll get into that in a little bit, and it happened. So we'll replay that of what occurred. But let's talk specifically about the here and now. Excuse me. Let me try to get a drink of water so I can speak to you guys. Let's talk specifically about the here and now, right? So on the here and now, what happened last night for me is I assure you of this, I placed my sell order, right? I'm going to write it down for you. This is exactly what I did. I went in, I placed my order. This was the number, 8788. I was thinking, sweep the high, etc. Let me put my sell at 8788. Don't be greedy, etc. No problem. And then what did I do? I canceled it. I'm like, let me cancel it out. By the time, and it wasn't that I'm thinking, hey, we're going to the moon or anything. I'm thinking, you know what? We'll have some time. It probably won't occur till the morning. Why? Who knows why I started to think this. But it actually played out kind of like what I was thinking. I was thinking, like, look, when we get up there, I'll kind of see the reaction. And certainly if you're watching live, that reaction is going to be pretty ugly. And to get out, whether it was here or there, that'd be fine. But the good news is my daughter woke me up at 3 a.m. So I was able to see that I got counterfeited on this guy and got out, so it wasn't too painful. But still, obviously, that could have been something that was really nice, and sometimes it just doesn't work out in trading. You basically have a good plan, everything was mapped out perfectly, and it's a 24-hour market. Sometimes I really hate that. This is one of those situations, and what do you get? Swing failure, right? You get a situation to where, really on the 4-hour, you end up with a swing failure pattern, which is simply making a higher high right here. So in the middle of this candle was a nice, beautiful higher high, and then it gets rejected out completely. So though the candle took out the high, it shows a massive rejection. That's a swing failure. It's pretty bearish, obviously. And now it's in a critical spot. So I mean, we could take a fib, and these are subjective, right? When you do fibs, I'm gonna get this thing out. This is the channel we're in, right? We've been in this channel for a long time. Let me get rid of that for now. And excuse me, the Fibonacci, the fibs where you take them, basically you're just doing a measurement of a move. You can take it from many different places. I wouldn't argue with any of it, right? I'm completely okay with you saying, hey, this leg is from here to there. Makes a lot of sense on a lot of elements, especially the 3-day. Makes a lot of sense to take it from here, which I do like to look at these on a 3-day. But this guy, the reason I'm going to use this one right here, one, I can look back and see what's looking more relevant, so that's okay to do as well. You can look at it that way. But I'll show you why in a second. This one also makes sense, right? So this is like the last bit right before the leg. Some people might take the big candle. I don't have a problem with any of these things, right? This all makes sense to me. It's just as long as it's something that's relative to your mind that you can tell a story based on it, then go for it. That's fine. I'll show you why I'm using this one. I mean, this was the drop-off point. You guys who know me basically know that I've been talking about this. Anything under 10.2 is dump susceptible. That's his box. When we were living under 10,200, we had a problem. We were waiting for that dump, and it certainly came. But we had this linear trend line, right? I'm not going to spend a lot of time on this, but we take it off a log scale. I prefer log for these trend lines for sure, especially with something like Bitcoin. But basically, to assume that this trend line is nothing is kind of silly. Now, this was a log trend line, more preferably, right, which broke down. So once you lost this, like, okay, and there was another one here, and really this was probably the one to watch. When we broke that, we started that process to where we were out of this significant expansion mode and knew that we were in a big consolidation. But the reality is this: you still have to look at like the linear scales because they mean something, right? They mean something to someone. So that's all I'm looking for, is something that means something to a crowd. And you get the jump off point, the base of the next move, and then ultimately we did have a nice base off that and a heck of a rally. I mean, going from 9,400 to 10,900, yeah, I can live with that. I'm okay taking those kind of plays. That's terrific, right? But then what? Another bounce. It's not good that you keep playing, and more times you touch it, it's just a normal trend line at this point if you're on linear, right? And the more times you touch it, the weaker it gets. And then ultimately we did break it, which I was actually happy when it broke. I'm like, all right, good. I don't have to look at this trend line anymore. But what did we do in the middle of that day? We bounced back, closed back above it, and then that was a nice little fake out and bled and finally lost it again, right? So from that point on, this was like the critical point. This is where I start to lay because this was the last ditch effort to get everyone in, to fool them, to get everyone on that hopium again. And then basically it bled out and then died out. Again, subjective, right? I'm drawing this particular zone, and I'm the one that is going to say that matters, and all I'm doing is taking it from the high point there to the low point there. And for me, why does it matter? Because anytime I'm below this 0.236, I'm dump susceptible, right? And it just so happens that we fell right to this area. So there's a battle here, right? You don't want to start closing multiple 4-hour candles below this area, and definitely don't want to start rejecting in this area, right? It really didn't want to lose this. That's why you saw this. See how I had this line marked out right here? This was the zone that we had to take, and we took it. And then you see it actually lived up there in a really tight area. It was really nice and tight. And if you look at it just on this perspective of the move, even if you take the leg, you can, again, all we're doing is measurements just for perspective. You don't want to put too much into any one thing, but to give yourself an idea of what's happening. Basically, what's occurring, it was sort of holding about that 0.236 area. If you go all the way to the low, then it's even a little clearer, saying, hey, from the low to the high at this point, right, because this hadn't come in yet, you were trying to hold that 0.236. It even bounced off it. So, and it doesn't matter if you started from here or there. It's the same type of thing. It basically just implies some strength, right, that it's not trying to give anything back. But more than that, there's always reasons for it. And the reason in this situation is you basically had this zone that you fought hard for, right? You rejected out. You lost it here. You see it fought back, got rejected again from these zones, probably both of them. Tried to get it. Nope, that's a rejection area. Finally, you gain it, and then it tried to live life above it, even gave it a rejection. But you don't want to peel back too much. We've been talking about this on Discord as well. We said very specifically, like this particular dollar amount to the number of, hey, if you basically lose this area again, we're gonna dump out, and that's essentially what happened. So it is what it is. You can try to plan it out, but now pressure's on, right? So we know the trend is down. So trend's down, and now you're in a situation to where what? 4 hour has downward momentum. 2 hour obviously way down there in the scary land. Basically, you want to hop out of there quick because pressure's on. 6 hour, doesn't matter what we look at. You're seeing now pressure from some higher time frames. Even the 12 hour bear cross, daily now going to be bear, not quite, but if you cheat a little bit and look at it without the smoothing, surely surely you're going to be bear cross there, right? So we use the smoothing because we don't want to react to every little movement, because basically this is just going to look like the chart if you do that. But the idea here is that, yeah, I mean, ultimately it's taken back enough, and that if it closes at this level, it's not looking very good. But the idea is this: you're in a situation to where we say, now, why is the pressure on? Because you don't want to live back below this 0.236 area. Now, again, it's subjective. So if someone says, look, I really care about the dump zone, all right, well, then 8,200 is that level, and that's fair. But still, you're in the lower portion here. It's a little bit dangerous. If you take it from this level, 82.79, again, I'm using this one. I think the fight's right here. And this is a level that bulls would want to hold on to try to build something on. But they're fighting against significant resistance. Now, not only resistance, they're fighting the momentum, right? So it's very important right here and now, especially on a Friday. What we're looking at is kind of a situation to where normally you would say, hey, look, this thing can peel back, it can come back to this golden ratio, etc. And it still can, and you could build out if there's enough support down here. There's enough people that are looking to accumulate down in this area. But it doesn't mean that you're not applying significant pressure, because we have other elements that are in play. Now, this drop was significant. This support is significant. 377 is significant. But there's other levels down here, right? This is the time-weighted average price that we spoke about, which is down in the 7,200 region. If we look at this area right here, I'm going to take this off, and I'm going to put it back on log because I prefer that. What also kind of corresponds in this area, this is that parabolic trend line, right? This was the original jump-off point to the next jump-off point on a log scale. Look, these things usually matter. They're interesting, at least. And if you don't want to lose that per se, because it's not that you can't lose it. Of course we can lose it. Doesn't mean it's a brick wall that can't be dropped or anything like that. It's just more of a line of interest. But it starts to bring into play some scary type of levels here, because yes, there's horizontals obviously in some areas, but usually these things like to play together, right? So, okay, yes, there's a lot of support here. I get it. But ultimately, we start to lose this area and reject. And here, I'm going to start to look at a lot of time being spent in this region. That would be my first thought. Now, can I change that on a day-to-day basis? Yeah, you should. Do some analysis and figure it out. I mean, ultimately, I'm not discounting this area. This is a significant area as well. And even if we lose this area right there, it's very significant, right? We see that. So there's a lot going on there. We had that major, obviously we had the big dump off. It rejected hard from this area, so it's already been tested once. Maybe you backfill into there and you try to take off. That would correspond with hold of this line, etc. So we could see that. And of course, by the way, the line, when you're drawing trend lines from this far out, a little movement of how you draw it. One guy might look at it like that. One guy might look at it like this. You could try to put on a line chart, make them a little more accurate if possible, but still, it's still your interpretation of a line. It's not something that's just built in, not to mention the scaling. There's a lot that goes on there. So regardless, this formation, not the prettiest, right? You set that doji, you basically dumped out. You want to see some sort of recovery and try to survive these time frames if you're a bull. If you're a bear, you're pretty happy, right? Ultimately, you just want to see that pressure's on, and you kind of get back into the situation where you say, all right, well, when I start to see exhaustion on different time frames, then I'm happy to take some shorts, and I'll watch them closely and play it that way, and that can certainly play out to give you some nice dump outs. So looking at the bigger picture, though, where are we at? Again, that 377 is holding well. We've seen on spot, now we know that futures is a different story, but again, I'm going to focus on the spot price at the moment, that we did reject the 200. Let me get rid of a couple of these for a minute. Actually, let me just add that. So these two reds are the 200. Don't get too confused by all of this. The things that matter here is this 377. These are the 200s. Now, what do we have? We have this 8 exponential. Why does it matter? Let me take everything off. I want to give you guys a couple things here. We could look at them one by one. All right. So look at the 8. we haven't held this thing. We barely got it right there. By the way, some people like the 8, some people like the 9. They're probably going to give you fairly similar results, but in this case, I've been utilizing the 8. Now, on this day, September 19th, was the last day you had the little head fake, right? And regained that temp just barely, right? Which I don't like. I don't like to barely claim them. But regardless, dumped out the next day. No harm done if you did get it because you'd be out right away. And ever since then, look at this. You're getting rejected. And even intraday rejections of that. Intraday rejection, come back, try again, rejection, rejection here again, rejection here again. Finally, took it up to the 200s. You're holding that 8, right? So, look, you want to keep that on your side. So, what would be a small win? We're talking small wins, right? Would be this guy holding this 8 exponential for today. What can we bring in? We could bring that 10 simple in. All right, a little bit different view here because you sort of grabbed it right here a little bit, that 10 simple. And I don't know if it held it the next time. And I guess technically you could say it probably held it here, right? Let me look closely at the number. 81.81, and then the close was 81. Yeah, so you gained it, you barely lost it, you had a little bit of traversion, right, and then regained it again. Same type of thing, you'd want to hold it, but for me, since I kind of look at them in pairs to begin with, I would want to hold both, right? I'm not going to say, oh, I'm holding the 10, but I lost the 8. It's a mediocre view, right? So, I mean, ideally, you want to at least try to reject that. Just as this was a success for the Bears, the Bulls want to try to hold on to something, right? So that would be just a baby step for today. If not, pressure's on. You're in a situation again to where look how long it rejected. You want to try to get back into that situation, or you're hoping to traverse it for a while. It's just a sketchy place to be. I mean, right now things are rough. I mean, you're basically looking for the 1 hour at the moment to hold these levels here, right? So I would say that if you dump out here, which is what 8,200 to this 8,300 range. I mean, if you see price now lose this level and start to reject in this area, bad news, right? So it's pretty bad news. We're probably going to test range lows, and then we can start talking about breaking the 377, going a little bit lower if that's the case. But either way, there'll be a lot of plays in there. So this is something that it's a tough fight right now, and bulls are trying to hold on for dear life because they don't have a lot going on besides the 1 hour, which is sort of in their favor. But the 1 hour. Obviously, it's not the prettiest situation, a little bit like of a BART, but if you can then reverse that and hold off here, you have a chance to at least build on something. Again, as always, you can kind of take a little fib here. And let's see. First and foremost will be the first step, right? Close a 1 hour above this 0.236. I don't get too caught up in a lot of the others, but if you're going to reject, if you do get above that, then people that might be looking for a bearish play might pay attention to the midpoint or the golden ratio, etc. But the idea here is that if you're trying to at least stabilize things, you want to at least start closing some 1 hour candles above this level, which is about 84.12ish, right? So until then, at the moment, pressure's absolutely on, and we just need to understand that the trend itself is down, so the easier plays are down, right? Now, one thing you might ask yourself is, how do you figure out like what a counter trend play is? We're not going to teach that lesson today, essentially, but we did talk about this. This is something we were talking about in Discord. I know a lot of you guys aren't involved in any of the student aspect of it in the learning, but being that they're involved in this particular live lesson, I have to talk to them as well. So forgive me on that part. But we did talk about this play, which is basically looking for the 12 hour to counter trend. And the way you kind of find these things out is you're just looking for something to show up, whether it's in stochastic or RSI or price action, etc. Which basically they all sort of tell the same picture, but the same story. But the idea is that what we talked about, just to relive, was like, look, if the RSI can regain 37, then we're going to basically have that chance for a 12-hour counter trend play, which that happened here. So we ended up regaining it. The next day you had the nice pop-up. And then you've seen this series of a 3 days, well, really 3 12-hour candles, right? Where you sort of got this like mat hold type of scenario. What is a mat hold? Let me just bring it up for you guys. And there's a few different names of how you would look. Mat hold is actually something you would really associate more with equities because it involves a gap up, but See if I can find this without it giving me a headache. All right, don't know this site, but at least it shows you a picture. So this is what a mat hold looks like. I mean, the same formation. You don't have to gap up. You can hold the same formation. Just basically a powerful candle. 3 candles now that have a bearish tone to them, that don't take out the midpoint of your big candle. And then usually you like to see a continuation off of that, right? So a bullish lean in of some sort, the 3 candles that hold, and then you go. So we've seen that formation a lot recently, whether bullish or bearish, etc. And it sort of played out here basically where you were able, this implies some strength. Now there was a lot going on, there was resistance here, but it was able to hold. It held the upper part of its range, and then basically that led to a takeoff. This was something that was playable if you were watching closely as well. I mean, it didn't just explode. Sometimes that can be frustrating. The 2 hours showed this very well. You know, you got a head start right here. I mean, this is a buy signal basically on a 2 hour. But you're in a situation to where, and I like the 2 hour, by the way, in case you're wondering why I always bring up the 2 hour. It seems to be pretty relevant. You've seen this all occurred on a 2 hour as well. Divergence, significant divergence, right? Intra candle now doesn't play out that way, but you end up with what? Making that jumping up higher, and you see where you ended up with your momentum, right? The momentum's basically down despite the fact that you went up. Now I know intra-candle what that looked like was very different. I'm sure this was looking like it was leaping up, but it certainly wasn't up here. So even when this thing was hanging out at 88 and change, it wasn't going to basically grab this type of level up here. So it doesn't really matter whether you establish that as divergence or not. The key is that you can see that things are happening on these particular time frames. So I do like the 2 hour for that. I also like to look at the 3-day a lot because 3-day has been really controlling the show, right? Not to jump around too much, but this 3-day has been the dagger, right? The entire time. I mean, if you look on all these charts, this is the chart where things have looked the worst, right? I mean, and you've had standard operating procedure, right? When you basically bear action, right? You come down, you come back to at least to about the 618. Next leg down on that 3-day. This one only went to the midpoint. Great. You end up with another leg. Excuse me. Made it back further. I started to the wrong spot here. So I come down. This one again back to the 786 or so. Another leg down. Back to about the midpoint, etc. And now we're dealing with this bigger one. So the question's basically been like, all right, well, do we have a shot to kind of run it back to this resistance? You know, it's still alive there. But the other part is like, look, the leg could be continuing, right? You end up seeing that a lot in these patterns. You'll see that if you go back in time a little bit. Like, all right, well, you'll get normalized legs where they come back nicely, even these little ones, right? And then you see this weak one, right? So then you end up getting a weak one. It's not a good sign, right? It peels off and then drops off. So same type of thing here. This was a sizable dump. Now, there's a lot of differences between here and there, but regardless, I mean, this particular pattern more recently has a lot of similarities to some of the things that were going on in here, and then of course some that we dealt with in the 6000, and of course this formation certainly has some similarities to this as well. But just because something's similar doesn't mean it will play out the same way, but it is something to keep in mind. But the idea is that the 3 days has just been terrible looking. I mean, this thing looked terrible, and finally you started to see a little bit of glimmer of hope here because you did get this nice candle that closed. But what happens again? You're rejecting this 8. You know, again, you want to see, you want to gain some sort of moving average that people find relevant, that other traders are going to find relevant, right? So if you look at these, the reason I was kind of looking at this kind of show you is like, all right, so you pop down. This was a little bit too early. But then once you break down under here, this guy gains this 8, you know, makes a little bit of run at it, right? Drops down again, gained it again, at least hold up a little while, right? But the fact that you're rejecting and rejecting, that would be super bearish if that plays out this way. Of course, there's some time left in this particular candle as it closes in a couple days, but the idea is that the picture is not one of health, right? It's pretty clear that you're making lower highs. And then here, again, this even was a little bit of a trick, right? Because you end up in a situation to where this, which took out 3 days worth of price action, actually is an inside candle to this candle, right? So it's all within that range. So you end up with a very bullish looking candle, and it doesn't change the fact that it's a nice candle. It is a nice candle, but the reality is it still is inside of that particular range. And then of course your first real attempt to get out of the range failed pretty miserably. So now you're in a situation to where you have to hope and pray that if you're a bull, by the way, I keep saying that. I mean, if you're a bear, you're probably pretty happy about everything because the easier trades should be on the downside. Now, the reason why there's a little bit of a mix there is that, man, this is a heck of a drop. So you you would like to see the drop. I mean, I love it when I like them quick. It's nice to make money that way, right? But you like to have the more orderly fashion drop because it does make the trading a lot easier. Like I did much better. I shouldn't say better. It was much easier to trade this part because you just had opportunity, opportunity, opportunity that showed up over and over again to short. Whereas basically when they're just flushing out, okay, well, if you're in on that trade, great, but I do like the opportunity to take multiple trades. So it's the same type of scenario. I mean, this is great if you were hanging out in America at 3 o'clock in the morning or 2 o'clock in the morning, whenever it did, or if you were on the other side of the country and it worked out that it was perfect for you guys, then, excuse me, the other side of the world, and that works out perfect. But fast and furious like that, first of all, who likes it when it just rushes up and dumps out? I mean, if you were wick catching, then great, but ultimately it just creates a situation to where I'm assuming that not a lot of people were able to watch exactly live and said, hey, let me absolutely short the strength into the higher high and go down while I'm sleeping. It's not something that a lot of people would have done. But, and I shouldn't say that. Of course, there's people that are shorting the top of the range. I don't want to make it sound that way at all. My point is that if you're watching, if you were sleeping on it, I don't know how comfortable you would feel. If you felt comfortable doing that, then that's you. But it's not something that I particularly like to do when I'm asleep because I rather keep an eye on this particular asset, the way it moves. Okay. All right. So here we are. Just jumping back in, let me see if there's anything very specific. We talked about the bullish mat hold that occurred and how the H12 counter trend played out. Just to get back to that, to the 12 hour, the reason I bring that up is so when this starts to happen, right, and you can establish and say, all right, the 12 hours making a little bit of a move. One way to understand that is what you put in a little bit of a lower high, a higher low, then you make a higher high. All right, this thing's trying to do a little bit something on that time frame. So it at least gives you the idea to be patient, right? If you're looking for shorts, because usually I would assume you want to be with the trend, right? So that should be your ultimate goal the majority of the time. And unless you're very good, you don't want to flip long, short, long, short, long, short, because I know the most painful thing that you can do is to be in this range, which I know it's exciting, right? A few $100s, but it's also just a few $100s. It's not a massive range. We're talking about something that's moved, all right, 7,700 to 8,700. It's $1,000, but we've seen it what 7,700 to 85, back to the 78, back to the 88, now back to the 82. So, all right, so you're talking about $500-$600 type of increments. Imagine being short and it goes up, and then you end up going long, it goes down, short. Maybe you didn't miss every one, but there's nothing more painful than ending up in the exact spot that you started your trades, and you went long, short 3 times wrong, right? And you're thinking like, geez, if I would have done nothing, I would still be in this position. But, the fear or your stops or whatever it is got you in and out. So the way you get around that is to be patient, to understand, like, all right, if I can begin to understand, like, hey, the 12 hour has some momentum, let me wait till it doesn't, right? Now, that means maybe you miss this entire move. Okay, that's fine, right? I'd rather be in a situation to where I can see some alignment now or say, all right, you know what? Now I'm getting to a point to where if I start to see this 1 hour show the weakness that I'm talking about, now I have the 1 hour showing weakness, the 4 hour showing some weakness, the 12 hour looking exhausted, right? Now I can establish a trade where, first of all, I can set myself a nice stop that's nice and high, by the way, to begin with. Doesn't mean you have to wait to get stopped out there. If things change in the picture and you don't like how long it's taking, get out, right? You can get out on break even. What you don't want to do is just put yourself in such a position to where you're setting these stops on like a 15-minute chart over and over and over again, and you're bleeding your account down based on the fact that you're trying to play, these time frames that are quite difficult in this environment. I mean, the whole point of these ranges is to try and exactly peel you away from your money. That's exactly the idea. I mean, this is games that are going on, and they want to bleed you. So be careful, because again, I'll repeat what I said a minute ago. Nothing worse than getting the direction right and making 5 trades that are wrong within that time frame. It's a killer. And that's not something to feel terrible about. It happens to everyone, but you can limit that by waiting for better opportunities. Now, first and foremost, a better opportunity would be waiting until this range looks like it's really going to break. What would that look like? The more likely scenario of this range breaking is getting down on the lower part of the range, right? I don't know what I can use here. I'm not much of a scribbler, but so this will be terrible. I'm so not a scribbler that I don't even know where it's at. Okay, so living in the bottom of this range, right? All right, probably not the best thing, right? Ultimately, so you would want to put yourself in a position to say, all right, well that's not ideal to live down here, but it works two ways, right? If you hang out for too long, then you start to say, all right, well this thing is holding on. Perhaps we can come up with that counter trend, and there's ways to be smart and to look into that. But if you see yourself bleeding, right? Again, we've spoken about this before. If you're just bleeding out, again, think about yourself. If you're out in the desert somewhere and you're bleeding out, you're not going to suddenly have the picture of health. It just doesn't work that way, right? If you have this nice little formation to where it's like, all right, well, we've hung out in a little while, and now it's just our turn, and you could see that with just basic momentum indicators, that's a different scenario. But the bleed out creates a situation to where all the time frames are against you, and that's usually where you dump out, right? This is exactly what occurred here. You see how it bleeds out leading in. If you look at the breakout, excuse me, forget that line. When you look at the breakout, it's usually the same type of thing. Like the real breakouts, it's just chopping wood, going, just beating down the door, and then finally the door breaks, right? And the opposite's true here, man. When you're breaking down, it's usually the same type of thing. Like you see that rollover effect, or if you're going to take a leg lower, you basically find yourself into a position to where you're bleeding. You break some sort of relevant support, and then you dump like this, right? So it's the same type of situation. You can see that on every time frame. If I put it on every time frame, you'll see that type of thing over and over and over again, where it's like, all right, well, here I am, I dumped out, I'm bleeding down, I dump again, right? So it's the same type of situation regardless of your time frame. These lines are changing on all time frames, but yet you can still see that type of scenario continue to occur each time, right? So like, what am I doing? I fought the good fight, I got flushed, I start to bleed out, I get exhausted, bleed, dump, right? Try to fight back, I'm exhausted, bleed, dump. So again, you can look for those formations and understand that, hey, the safer play is when we're looking to break this range. Now, does that mean let it flatten out here and then short the absolute support once it's been holding for a long time? No, of course. You want to find a position towards a little bit of an exhaustion, right? So if this guy starts to peel back, you break under this level, you start to peel back, you find the resistance here in the same area that they were trying to fight for, then yeah, that's a good place to get in so you can enjoy this part. And then if it does snap back on you, it's okay, right? You basically either took some profits along the way anyway, or you're not really hurting from that. We're not shorting. I don't, at least I'm not trying to short the actual breakout. I'm not a breakout player. If I'm looking for a short, I want to short some strength, right? If I'm looking for a long, I want to buy when there's a little bit of weakness that comes into play. So if you tend to do that, you're not going to get yourself in a lot of trouble if you do it wisely, right? Now, of course, there's systems and ways to use that, etc. But other than that, that's where we're at. Pretty simple. If we somehow find our way back into the top of this range and start living up here, then you could start to think about possibly taking out some of this. And then what would we be looking at in that situation? Well, there is a lot to look at. I mean, we have the 21 week. I'm going to clear all of this out for now. I don't even know if I have it up at the moment, but again, I'm not making any sweeping observations. There's weakness right here, so I'm looking for things to continue to be weak until they're not. I'll play counter trends happily. My counter trends, I want them to be short. I kind of broke that rule yesterday, which was a mistake, right? Where I went to sleep on a counter trend play. It's just dumb, right? So that's on me for that. It's the same type of thing. If I'm on a counter trend, I got to be watching it, or I have to be able to take an alert. So I know better, obviously. So it's the same type of thing. If you know you're countering the trend, hey, keep an eye on that thing. If not, go with the trend type of play. Same thing, you want to be available for an alert, but normally you're going to be in a position to where you feel a little bit better. Now, if this thing finds its way and can meander itself a little bit higher and hold an area, then yeah, there's no reason why we can't at least get a test of this 21 week just to kind of see where we're at. The 20 simple should kind of, the 20 simple is going to be a little higher, I think, right? Yeah, so the 20 simple is going to be way up here because it's going to react more. It's going to have 17 of these candles still, so it's going to take some time. This 21 week is more effective. Now, from the low side, I'm going to be looking at this 21 month, right? So let me clear some of these out. I don't need the 20 here. I don't necessarily need that either, but this does show you that there is a lot going on here on the monthly, right? This all makes sense that you're in a situation. First of all, we're right at that monthly open again, so this is also key level where we're kind of trying to hold the same area. There's no surprise that we're right here back in this spot. This is where the fight is right now, and ultimately whoever wins this direction is going to have, feel pretty good about themselves for a short time. I mean, the Bulls can't feel so good after that dump, right? So I shouldn't say that. If the Bears win this little fight here, then they're in a pretty good position is what I should say. The Bulls can kind of have a little hope if they can win this next 4 to 6 hours and kind of live up here a little bit, but they're still at risk. There's significant risk to the downside until they can roll over some of those momentum indicators. But you're in a situation here to look what I have here. 21 month. First of all, this is the big boy stuff, right? 21 month matters always, right? What do I mean by that? 21 week matters in bull markets and bull market tests, but the 21 month, this is really the line between death, bear, in bullish times, right? So what do we see here? It's not that this wasn't bearish. This is all very bearish, but this is the dark side, right? So you come out below that. This usually vibes with the 89 week, but this is like the dark side here. And then when you finally get back above, okay, we can have those happy times again. Same thing last year. We talked about this entire time. Basically, I was posting this in June, right? Once we lose this, we're going to take a journey through the desert. You better believe we journeyed through that desert. It was months of pain. Once you regained it, all right, different lifestyle. Okay, now we can have a little bit of fun. You're getting back into that purgatory type of situation the way we've been now. But if you lose this guy, forget it, right? You don't want to lose that on monthly close. You see that they do show a little bit of wicks here that hold. Again, if you just dump through that, would be surprising to me. I didn't think we were going to dump straight through the 21 week either, but 21 month would really surprise me. I would expect a bounce there of some sort. It also lines up with that time weighted average price, the yearly version right there. That's that pink line. It happens to sort of mix in with this 10 simple. Basically you could try to hold that. We could see that basically has been an interesting level. Basically had a little traversion here. You lived under it for over a year. Once you regained it, we've had it for 1, 2, 3, 4, 5, 6, 7 months, etc. So you would think usually would give you a little bit of a hold or a bounce. Usually when it does touch there, you start to see it hold a few different times. Does it mean it will and it has to? No. Again, we don't have to have sweeping observation. We want to make an awareness play and say, all right, when we get to that level, what might we then do? Well, if we have a short, maybe we take some off, right? And then we say, okay, let's see if there's an opportunity for the possibility of a counterplay if we get to that level. That's the idea. If you lead in and say, all right, well, let me go ahead and take some off my short position. If not, go ahead and cash it in completely because of the fact that I'm now at a major support area, which should be. And by the way, you burst on through, you come back and reject it, it's not the end of the world. I mean, we don't have to, you guys, this is the big thing that I see people doing. You guys think, and I don't mean you guys, some of you guys think, right, that you have to short here, long here, short there, long there, short there, long that, short that, long that, short that, long that. If you did that, you're a multi-billionaire in a few months, right? You don't have to do that. You have to be able to take a look and say, this is a good short. Maybe you're wrong, by the way. That's okay too. But you're identifying higher probability shorts, right? That's one. Guess what? That's one, right? Maybe this was starting to look like one, and then it started to reverse course in here, and you had to dump out, right? I could understand that if you said, hey, this came in, started to look pretty ugly on this scale, at least on this time frame. I respect that. Now, of course, there's other things we could bring in to help us with these decisions, but obviously I'm not going to be able to teach this on this stream here. But the idea is this. There's ways to do that are pretty, and they're simple, right? I mean, now, there's a lot to learn, right? So don't get me wrong. But the context can be fairly simple, right? I mean, basically where we could look and say, okay, this is a safer short, right? These are things you could talk about and understand that this is a safer long. This is a safer long, right? So we can come into these scenarios and have general direction plays which help us to identify areas, just as if we came in and started to reject in this area, same type of thing. We didn't quite make it there, so not to mean that some other person didn't use a different time frame, a different strategy to identify that as a great short, and if they did, good for them. And that's okay. You don't have to have the same plan as the other guy. I know guys that, a lot of guys, they send me their trades all day, every day, and just waking up this morning, I had someone send me talking about how great it was that they longed into the 8,800 range. Great job. I had someone else, or a few people that said that they had their shorts ready at that 87 and change range and woke up to a significant profit. So here you are. You have people with just conflicting thoughts. Some are looking for shorts, some are looking for a long. If you have a plan behind it, right, and you have a protective mindset first, always protect your money before anything else, well, then you're going to put yourself into a position to where long or short, you could be fine, right? You just have to have a genuine plan for your strategy, right, for your edge. And edge doesn't mean I'm going to win this trade. Edge means, hey, on the 100 trades, I know I'm going to be fine if I stay disciplined, right? If I use my edge and I'm disciplined, then look, I might drop one there. I dropped one here. I can drop one here. But the 2 or 3 that I catch, right, whether it's this one or these 2, it's going to more than make up for it. In over 100 trades, I do very well. And that's the idea. You guys have to really program yourself to understand that there's losing trades. Absolutely. Don't feel burnt. Don't feel anything. What you do is you make a note of it. You go home, study it some more, right? What did I do here? Where did I mess up? Oh, okay, I see what I did. Momentum was showing this. I actually should have been aware of that. Oh, it depends what you use. Well, my RSI, all right, look at this. This is obviously very weak. There's no reason why I should have been in a long in that situation. Okay, corrective action. Let me make a note. Let me put a sticky on my computer screen until I know that I just can't make that mistake. I mean, when I was learning back in the day, first of all, I wasn't someone that just picked it up, right? I made a lot of money. For people that know my story, I know a lot of you guys have heard this way too much, so I apologize. I took a couple $1,000s, in 1999, right? Turned it into a significant amount of money in a matter of 3 months, right? Over a $250,000, and for a young kid, that was a lot. And this is a painful time of my life because I can tell you that I bled every penny back. Didn't take out a dime. When I tell you I didn't take out a dime, I didn't take out the 2,000, right? I didn't take out one dime of that money, right? I was shopping for yachts when I had 250,000. I'll never forget. I went and picked up the book. I was sure, if I went from 2 to 250, easy math, I'll soon be at a couple million and then 100 million. That's just how it's going to work. I didn't think there was loss, right? But I didn't know that I didn't know anything. I just didn't know. And then I didn't just learn. Now, I became a profitable trader first, but being profitable is one thing. Wealth expansion, right? Truly generating wealth is something very different, and that took a lot of years, right? So it wasn't even that I basically just got it. A lot of people do. Some guys that get it in 6 months. God bless them, man. That wasn't my situation. It took a long time. I was a young kid. I was burnt, right? I had bear market disease, right? I came out of the nasty bear market. You guys don't know a bear market. Well, it went on in 1999, 2000 after the dot-com and biotech bubble and all that. That's what a bear market looks like. Trading equities is more difficult than trading crypto, right? In general. So there's just more to deal with. You have fundamentals, you have earnings, you have landmines, you have all kinds of some news elements. I don't believe in a lot of the news elements. I think it's usually showing up on the chart, but still, there's a lot more to deal with. You have different industries, right? In crypto, either things go up or they go down, right? If Bitcoin goes down, everything goes down. There's no circumstance where you say, hey, Bitcoin just lost $1,000 today, but hey, my alt is up in USD. No, absolutely not. It gets crushed in that situation. Maybe sometimes you get one outlier, right? Remember when we had DGD last year when Bitcoin was getting dumped and people thought for some reason that was some sort of inverse hedge, which I wish there was. I would love for there to be an inverse of Bitcoin that existed in the crypto space. But the reality is crypto, this is Bitcoin's world and the rest live in it. They're remora fish. And when the moment that shark gets hungry and decides, you know what, I got to eat some of these remora fish, damn sure he's going to eat them, right? And that's what happens when Bitcoin takes a dump. So do the alts in USD. But the idea, the reason I brought that up is that in stocks it just doesn't work that way. So you have one sector that goes down, the next sector, the next sector, the next sector, right? And it's like dominoes, and it can be very painful. But regardless, you're in a situation to where that was a very long, hard process, and this all started, me rambling here, based on the fact that I can remember putting sticky after sticky after sticky after sticky after sticky on my computer screens, right? They were monitors back then. We didn't have the awesome flat screens that we have today. They were, giant monitors that I would have 6 giant monitors stacked up on my desk. But the point is that there would be sticky notes everywhere just to remind myself, don't do this, don't do that. Because what is trading? Do less, right, of what doesn't work and more of what does. And that's it. You know, the things that work 50% of the time, get rid of them. It doesn't help you, right? If I say, hey, 50% of the time when this indicator tells me that, this works out pretty well. No, if it's 50, I can't do anything with that, right? I need to find some element of an edge that works consistently. I can't have it. Sometimes it works wonderful, and sometimes it gets me crushed. Anyway, that's it for now. I'm going to go ahead and jump out of here. Hopefully you guys are good as far as I see your questions that you guys had. As far as mentorship, indicators, things like that, I don't sell the indicators as a standalone. It's just, I don't think that, first of all, indicators are good, tools are good, they're helpful, but you need to know how to utilize them in the first place. I provide them, right, to my students. I try to show them how to utilize it, etc. And I do mentorship because I do believe in teaching men to fish. You know, ultimately, people that have that interest, guys, you know, contact me directly on Twitter. Again, I'm not going to turn these things into advertisements, but being that you have those questions, again, you can contact me on Twitter if you have an interest in that. And if not, I'll continue to do these. They'll be free, and don't worry about it. But ultimately, don't get caught up in chasing a miracle indicator, specifically to think that's going to be the end-all, be-all. You still have to have a human element involved in that, for sure. If you got the human element involved now with a professional tool, now that's a big difference. And I'll pay anything for those tools. I'm happy to pay. You know, I see people selling an indicator like, hey, this indicator is the best that's ever been, and it costs $500, $800. How is it 500? I mean, I'm just letting you guys know that makes no sense, right? So it's the best thing ever, and it only costs $500 to $800. Doesn't make a lot of sense, guys. I mean, you gotta process this thing in your mind, right? Ultimately, that's not a lot of money. So this is something that you should be aware of as well. I mean, there are very good tools and bots and things like that that not very hard to research that work pretty well, and they're going to make you a little bit of money. And if you have more money, they'll probably make you a little bit more. If you have a couple million to put into your bot, meaning to let it use for some trades and do some algo trading, then you're going to do better than the guy who only has a couple thousand. But those costs, you know, there's fees on that. You know, you're probably paying eight. I mean, from what I've seen, I haven't seen one under like $8,000 that I thought was decent, right? And I haven't looked at them in a long time, so I know those prices even go up. And guess what? They work for a while, and then they sort of run their course, and you better hope that the provider has been changing that algo a little bit. Because if you're just straight bot trading, you need that human element. So instead, don't get caught up in that. You know, you can basically learn. Now, learning's hard. It's not easy. Learning takes time, right? But it's not hard like being a surgeon who has someone's life on the line, right? It's not hard like rocket science. It's not hard like quantum physics, right? It's hard in a way that it's a new language. Same thing I always say. But not only is it a new language, it's not just a new language. Instead of, because I could say, hey, I can teach you Spanish. You know English, I'll teach you Spanish. But in that situation, I could, for 95% of the words, I could say this word means that word, right? And you can learn that way by basically learning what each word that you know in this language, English, means in Spanish, right? And you could basically over time take that on. The difference here is that it's a completely new language. You're not getting anything. You're basically having to come up with everything that looks completely new, and sometimes it can get you very lost, right? Because you don't process it, you don't understand it, and a lot of times your mind won't allow you to even understand that you don't understand, because the battle is against yourself, right? I tell everyone this: you're fighting yourself. Your mind looks for shortcuts. Look into brain function, things of that nature. You know, we naturally want a quick answer. Quick. I was just telling someone about this today, actually. And that's just how we work. We're wired. So at least know how you're wired, right? And you're going to come up with an answer for yourself. And usually that answer is, this doesn't work. I can't do it. This is BS. It's not possible. It's not true. None of those things are true. That's your mind being the enemy, right? Your mind is your enemy in trading. Your mind is the one that says, don't stick to your plan, change your mind. Now, by the way, I brought up earlier a point. I said, look, if I took a short here and it hangs around, then maybe I'll cover and say, no, I don't like what's happening. Well, that doesn't mean I didn't stick to my plan. Just because I set myself a stop loss, right? And then the circumstances begin to change, well, that's different. If I have confidence in my trading and I decide that I'm going to cover because I believe the situation has changed, well, then that's good trading. But if you have a plan, right, and you say, hey, look, I'm very confident that this thing is going to, it doesn't really matter. If you start to break down, let's say you target this area as a support, but then as you start to get a little bit closer, it has a little bit of a bounce in this region, you get scared, you take profit. This thing happens. Taking profits is never a terrible thing. I'm just trying to make a bad example here, but my point is that you didn't follow your plan, right? In that situation, the plan should have been, hey, if I reach this level, I'm going to take partial profits, right? And then if I come back and see some weakness, I'll probably add to that because my goal is to get down here. That would be a plan. So the idea is to follow your plan and then work, while it's not working, you sharpen your plan, right? And understand, where did I go wrong? Oh, I see, I didn't follow my plan here. Or wait, that what showed up here wasn't strength, it was just that it was taking a break. These type of things. This is normal behavior, etc. So if you can formulate that plan and then continue to constantly work and work and work on your plan itself, and not perfection. Remember, the plan isn't perfection. The plan is edge, right? Because it still won't work out part of the time, but that's what's going to allow you to get to your goal of actually being a good trader. Okay, so hopefully you guys understand that. I'm going to jump out for now. We'll keep an eye and see what goes on for now. Market cipher. I don't know what that is. Let's see. Can anyone tell me the current price? That's funny. All right. I think I answered some of your questions, basically, of what you guys had. If you guys think of some more, my guys can ask me some questions on Discord. If anyone else has some questions, you can shoot them to me on Twitter through a direct message. And I'm going to let you guys go for now. We're going to kind of see where we go from here. We're still in this range, right? Just a very short review of everything we talked about. We're range bound. We have to break this range. We break this range to the upside. Certainly, we're targeting the 21 week and maybe back to the top side of this range to see where we're at. We know that Bitcoin does have a propensity to sort of run through these areas, so we'll see, but we'll play that cautionly. It's a long ways away. I mean, that would be a big turnaround, obviously, and right now we're in a little bit of a danger zone. Now, if you start to break out of the bottom side of this range, then ultimately there's a lot of targets that make sense down in this area, and they have made sense for a long time. Of course, that would mean a break of the 377, which is exactly where we stopped out, and that would be a little bit concerning for sure, right? I mean, it's already damn concerning the way it looked, but that doesn't mean there's not plays. The volatility is a good thing. I don't like it to happen so fast, right? Because it does hurt you if you're not exactly in that particular move. And being it's a 24-hour market, I'm not going to watch it 24 hours a day. I don't know if you guys are. If you have that energy, God bless you. I got a family and other things to do in life, so I would tell you do the same. Make a schedule that makes sense for you, where you say, hey, I'm going to watch the market this amount of time, or I'm going to take high time frame plays this amount of time, etc., and kind of work it that way. And you could set your stops appropriately and set your risk appropriately, because staring at a screen for 20 out of 24 hours is a good way to drive yourself insane. But hopefully all is well. Give me a shout, as I mentioned, if there's any questions. I'm out for now. This is Mr. Anderson signing out.